The flagship metal company of the Aditya Birla Group, Hindalco, is seeking to list its key subsidiary Novelis in the US via an offer for sale. Novelis generates over half of the consolidated revenue for Hindalco, and its IPO is expected to be sentimentally positive for the parent. However, a re-rating for the parent company, that is Hindalco, may still be a long shot, analysts say. This, they said, is due to a lack of clarity on how Hindalco will use the proceeds from the proposed IPO.
Hindalco is already a cash-rich company, so it raises questions where exactly Hindalco will use this cash. It can either use this cash in order to pay a one-time dividend to its shareholders, or it can use this cash to expedite its domestic projects, or maybe it can set up a vehicle in order to fund the capex at Bay Minette in Novelis.
Hindalco's stock crashed up to 15% on February 13 after Novelis sharply raised its capex cost for the Bay Minette Greenfield unit by 65%. However, its IPO announcement has not led to a recovery in Hindalco's share due to a lack of certainty that the proceeds will be used to fund the enhanced capex. Since Hindalco already has strong cash on its balance sheet, a fresh issue of shares by Novelis would have been more beneficial in lowering its debt, believe analysts at Nuvama Institutional Equities. Due to the revision in the capex, Novelis's net debt could rise to $5 billion by the end of FY26 from $4.6 billion at present, as per analysts.
If Novelis trades at attractive valuations, then it will possess the ability to raise more money through subsequently issuing equities to lower its debt. If it does that, then Hindalco's debt also comes down, and that will lead much more comfortable to Indian investors.
Meanwhile, the possibility of Hindalco using the IPO proceeds for dividend payout can also not be factored in just yet. Thus, investors should stay put and not take to fresh buying in Hindalco stock, analysts say.
The existing investors can stay long on the stock. Fresh entries can be avoided as we await further update on how the company will deploy the cash and how much valuation the Novelis subsidiary receives.
As far as valuation is concerned, the derived market cap of Novelis is currently around $9.6 billion. As per reports, Hindalco could seek a valuation of $15 billion for the proposed IPO. It had bought Novelis for $6 billion in 2007. Thus, key details of the IPO should be waited for before taking any investment action. Today, on February 23, investors will react to the RBI's latest policy minutes and global market cues.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.